Weddings in India are a grand affair when family and friends come together to celebrate the happiness of the couple who are tying the knot. Along with the celebrations come gifts, which are a way of expressing love and affection towards the newlyweds. But did you know that in our country, gifts received during weddings are not taxable? This comes as a huge relief for the couple and family who are already burdened by the expenses of the ceremony, and for others who worry about the tax implications of receiving such gifts from friends and family. Hello everyone, I'm Hemant Abhishek and welcome to a brand new edition of Paisa Wasool. Today we will talk in detail about the tax implications of receiving gifts during weddings. What does the law say? For starters, Section 56, subsection 2 of the Income Tax Act 1961 is the legislation that covers the taxation of gifts received from anyone and at any occasion. According to the Act, gifts received by the individual during their weddings are not taxable. This means that any gift, be it cash, cars, house, jewelry and stocks, received by the bride or groom during the wedding ceremonies are exempt from tax. This exemption is applicable to gifts received by the couple from their relatives and friends only. What are the conditions? It is important to note that there are certain conditions that need to be met in order for the gifts to be exempt from tax. Firstly, the gift must be received by the individual on the occasion of their marriage only, not on engagement, not on bidai. Secondly, the gift must be received by the individual or the couple only, and not by any other person of the family. Otherwise, gifts valued beyond Rs 50,000 are taxable, and if any of these conditions are not met, the gift becomes taxable. It is important to understand that this exemption is only applicable to gifts received during the wedding ceremonies. Hence, the tradition of keeping a record of all the gifts and cash received during the wedding, including their value and the details of the person who gave the gift, is actually a very useful one. And the practice of clicking photos with the couple while giving gifts is also very useful. We'll tell you why. Because maintaining such records helps in case there's scrutiny later on. And during scrutiny, if the income tax department doesn't receive genuine proof of any item being received as a wedding gift, then the couple could be liable to pay hefty fine and penalty. Another important point to note here is that this exemption is only applicable to gifts received from individuals. So gifts received from companies, firms or other entities will not be exempt from tax, and the value of such gifts will be added to the individual's income and taxed accordingly. Also, the car that you receive as a wedding gift may be tax-free, but in case you decide to sell it off, then the amount received would be taxable. And if that vehicle received as a wedding gift is being let out as a taxi, then the fare received will also be taxable. So don't hesitate in receiving wedding gifts or in gifting generously to friends and family members who are getting married. But do remember to keep a record of all the gifts received and ensure that they meet the conditions mentioned in the Act. Also, when in doubt, consult a tax expert to understand the tax implications of such gifts and to ensure compliance with the Income Tax Act. And that's all for today. We will return in the next video with some more wealth and investment tips and tax saving tricks. Till then, goodbye, take care and keep wasooling paisa, because if it's not value for money, it's not worth it.